Moin Moin aus Hamburg. Wir sitzen hier am Rathausmarkt bei Cap Insight. Heute wieder mit einem spannenden Video und ich habe heute zu Gast Rowan Francis von TAMAC Asset Management. Er ist Head of Asset Management bei TAMAC und wir werden gleich auf Englisch switchen, weil er heute aus London eingeflogen ist. Rowan, welcome back to Hamburg.
Hi, Henrik. Good to see you.
Hey, today we have the topic also on China again. In the focus is the investment region, China, of course. So my first question is why investors should invest in a single country instead of a region, for example, the Asian sector completely?
That's a good question. I mean, there's two parts to it. One is why China specifically, and that should be focused out. And for that, if you take China as a region, 10% of global market cap, roughly, if you include all of the China indices, 20% or a bit less of global GDP, yet in a typical MSCI world fund, less than 5% allocation, and most investors, again, less than that in their portfolios. So for an area that covers so much of global growth and so much of where growth is going to be coming from, investors are hugely underweight that sector. Why we like to focus on particular themes or geographies is because we think that's where you can find the best growth. The world will continue to grow, so that's fine. But if you want to make an above average return, you have to take basically a bet or a positional view. So we like areas like green technology or innovative technology or China in this instance, where again, we invest within those themes within China. And we say if you can pick an area that is interesting, in this case China, that is above average for where you should be allocated, and then pick the best growth opportunities within there, it gives you the best opportunity for those above average returns that we look for.
Perfect. When you're saying you're coming from London and now you invest in China, so how do you get your reliable information? Do you have a research team in China, or how do you do your research?
So we have a network of research partners that we use in China to get our research. On the ground input is very important. Basically, the level of due diligence for an average Chinese company. And we're invested in companies from, say, 5 billion market cap up to the mega caps. But if you're in that mid cap space, you have to do an element of additional due diligence. And for that, you need some on the ground input. We're quite good at the translation networks that we have so that we can get information in English. My Chinese is not particularly good. But that sort of filtering process, which is part of our investment process and the first stage really, to cut away any company we feel is a potential risk. So that's our approach. If you start with a large universe and we want to, as quickly as possible, discard companies that are higher risk for whatever due diligence reason, that brings you down to something that's much more manageable from the several thousand companies that are in our universe initially to sort of mitigate those risks.
Yeah, you're talking about the environment of investments. So what is your fund, so the TAMAC China Champions Fund, doing different to other China funds?
Okay, so we are in a fairly concentrated portfolio that's relatively equal weight. So that's the first part. I don't care about the market cap composition of the companies we invest in. If you look at our typical peers, they're going to be invested, their top three positions are those BATs, Alibaba, Tencent, Baidu, JD names, and they're overweight those names because of the size of those businesses.
Yeah.
Now, what I care about is the business itself, the growth opportunities for that company. If you're a 2 billion market cap company and you can grow to 20, you have a better growth run rate than a Tencent does. Tencent is a great business, I like them. There's nothing against them, but what you want to allocate capital is how good is that investment. What judges how good an investment is how good the business is. You can invest, macroeconomic conditions will dictate share prices over the short term. Whether or not you're willing to pay a lot or a little for a company is external factors, not just how good the business is. But if you've invested in a high quality business, then over time, that will return your investment basically.
Yeah, so in the long term, yeah. Do you have some examples for this process of companies, maybe what our listeners or watchers don't know? Like the normal guys are always Alibaba, Tencent, we heard about that, but something new.
Exactly. Well, we are invested, over 60% of the fund is invested in mainland China, so in A-share markets. So Tencent and Alibaba are offshore listed companies essentially. Our biggest position in the fund at the moment is a company called Thundersoft software.
Okay.
They do operating systems. So they're an operating system provider in China, competing against Western peers, winning market share at the moment, growing faster than other operating providers globally in a market that is growing more rapidly than the rest of the world. So these sort of businesses that are trading at effectively discounts to international peers in markets that are more favorable, or growing faster, I should say, and these are in areas that are then being favored from a regulatory perspective. China wants to push domestic champions themselves.
Yeah.
So they want to have internal technology sourced internally. We have a company called Now Technologies, which is in semiconductor space. So again, an area that China wants to be championing it in. At the moment, Chinese technology is catching that of the US. It's not there yet, but that catching effect means you have a rapid growth in that area. You have supportive policy from China for semiconductors as an area.
Yeah.
So again, you have a business trading cheaper than an international peer in a sector that is growing faster, and where the long-term opportunity is very favorable because you have a government backing. This isn't the mega caps that have the regulatory headwinds that potentially we're seeing in China. These are areas which have regulatory tailwinds, and therefore that should be supportive of growth.
Yeah. You named this domestic champions. In which sector or in which branch you find these domestic champions in China?
So if you broke us down by sector, we are quite heavily in technology as far as an area, which you'd expect. But technology is such a broad sphere. So we have a lot of consumer-facing companies. But when you look through where our businesses are sort of trading, so green technology and environmental impact type investing, there's over 30% of our fund is in companies that are involved in an element of green or environmental technology to some degree. And that, again, is an area that Chinese authorities are pushing from a regulatory perspective. It's growing very rapidly anyway, and it has those additional tailwinds, and where China are leading the world. Over 40% of electric vehicles in the world are in China. They are leading the way as far as green energy goes, and so the opportunities there are very large.
Okay, that's great. Rowan, thanks for these statements. We will have another video on the ESG topic on China. Stay tuned, and until the next time. Bye.